Welcome, everybody, to the live stream. Good grief, Sledge. Spending all that money on airline Wi-Fi. Anyway, hey, everybody. Good morning. Everett, Don, Wade, Roland, Svinborn, Marianne, Robert, Infinity, Sergio, Craig, Donald, John, Cliff, Rex, Jan. Good morning, everybody. Good morning. And make sure you give me a thumbs up if anything I say is helpful, beneficial. Good morning. And if you want to chat with me on the live stream, click the button over here, be a subscriber, and you can chat. But if I'm no longer live, you're going to have to leave a comment down below while you're down there. Check out the more button. Maybe if you're not a Market Roadmap member, you want to do that and get the Market Roadmap. Everybody says super beneficial. It's like $5. And you get in Discord, so you can come chat with me all day. So anyway, alrighty. And remember, today is Tuesday. We do 30 minutes of awesome at 5 p.m. Eastern time. So after the market closes, give it a little time to chill off. And then we do your request for at least 30 minutes, plus a little market analysis and outlook. And, it's a little more casual than the morning stream, where I'm trying to get through it and go keep track of the market. So anyway, all right, moving on. We have CPI hitting this morning right here. And we had some volatility. These, interestingly enough to me, we basically came in line previous, although the year over year actually increased. And I think it's interesting they changed an increase from being a red thing to being a green thing, unless somebody just goofed that up. I didn't think going up in CPI was what the goal here. That means inflation's going higher, and maybe we're making the trough. I don't know. It looks like we're just kind of chopping here in this area, not really popping, not really dropping, stable at about 3.2. Hey, Kimberly, my lovely bride, here on the stream, and anyway, we 2%. I'm not sure we're going to get to 2% ever. You look at the long time, like they're like, oh, sustain 2%, blah, blah, blah. I mean, if they bake the numbers, they can bake it to 2%. But when you look at the big picture numbers and the historical, where we've been on inflation, and Powell doesn't even like to use CPI as inflation, but, whatever. We've been, what's the under over on 2%? Like 2% right here. We have barely ever held it for a quarter. Right on the nose. I mean, usually we're either under or over. And, I mean, a lot of times over, sometimes under. And, I don't know. I doubt we're ever going to hit and stay at 2%, like, for any sustained. I mean, look, this thing doesn't sustain anything. It's a oscillating, moving creature. Hey, Wrongimer. Glad to see you this morning. And so before we get into trades, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here, informational, educational, fun, and entertaining, not a recommendation to be buying or selling anything. All right, don't buy stuff from me. Don't buy stuff from other gurus, purported gurus. Most people are full of crap. Make sure you trust people before you buy something from them. And don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries, don't long them, don't short them, don't trade them, unless you understand all the risks and have a plan. Now, if you desire personal financial advice, you're like, JT, I just need help. I need to know what to do. That's not what I do, all right? I share what I'm doing and give you a way to learn and ride along, but I don't tell you what to do. If you need somebody to tell you what to do, you got to hire and consult a financial advisor, but make sure you trust them too, because most people out there are just looking to make some of your money into some of their money. And so there you go. All right. Look at the volatility this morning. This is lagging. There's delayed data, and maybe pop down to the 5 minute there. Look at that spike down on that increased inflation. Then we popped up. We hit the 618. Jump back up to the 15-minute. Look at that whole drop off of that pop from Friday down to the low yesterday. Retraced to the 618. Held fast so far. Held fast. This is delayed 10 minutes. So we're got, I don't have the last 10 minutes of price action, but, by the time I do have the current price action, the market's going to be open. So looks like we're churning a little bit here. And I'm not sure that's bullish. Look, one wave up, wave two retrace, wave three up into the 618. If we hold, so right here we've set it up. We've set it up. If we hold this right here today, I'm gonna say 52.30. If we break above that, we're probably going higher again. How much higher? Well, the target, just like last week, same kind of move, same kind of setup. The target would be right up here, around 52.84. And that could take a couple days to hit. Now we do have PPI coming out later in the week, which is Producer Price Index. CPI was Consumer Price Index. Now producers, if we're going to see higher prices in the CPI, typically we see a ramp in the PPI about 3 to 6 months ahead. It takes a little while for the producer prices to trickle down to consumer prices. Now, that's me evaluating the numbers, not a commonly held metric. I don't know. It's economists will tell you all sorts of garbage that doesn't apply in real. It doesn't show up in the real world. I mean, they have all these theories and garbly-gooks and whatever. And I'm saying a lot of garbly-gook today. Good morning, everybody. Glad to see everybody. And if anybody has a big question, try to stop me. I don't always keep the chat up, but there we go. We're coming into, another thing we've got coming into is we're coming into mid-March. That's usually when we see some volatility. And I'm just talking about seasonality here of the last 20 years. I'll pull it up and show you. Typically, we have seen a spike in volatility mid-March. This is 20 years added together, averaged together here. Typically, the typical year sees volatility in mid-March. The typical year sees volatility in early February, and we didn't get any of that. We've just been pounding it out higher ever since the beginning of the year. And actually, we started back, end of October, beginning of November. And we've just been pounding out, going higher, not looking back at all. No 2% pullbacks. It's been one of the longest stretches without a 2% pullback that we've had. And if you recall, the most wonderful, it looks more like this over here than it does this over here for seasonality. But the thing I was saying here, if this move right here, duration-wise, I erased it off here. Look at this. So duration-wise, the move from the lows of March, we could just do this with a box tool probably. Right here, up to here, up to the peak we did in July, right? Grab that box, move it over to the low from October, right there. Look where we are. We're going to have to extend it up just a hair. We're almost there. We're here. That would be the same duration. If it's an echo duration-wise, where does that put us? Right there. March 18th. Could be the top. So next Monday. What's next week? FOMC week. Curious. So there may be a limited time left on this upside. There's always a limited time. Nothing goes up forever. So I'm just saying we may be getting closer to the end of this than, especially if we are echoing this duration of move right there. Another way you could do it is to use the Fibonacci time tool. And I don't know where it is. Let's see if I can find it. Nope. Here we go. February time zone. February. Fib time zone. 1, 2. And that didn't work. That wasn't the tool I was looking for. Trend-based fib time. Oh, I got it on the bar. Duh. So that one to that one. Projected off of that one. And you can see the red bar comes out right there. There you go. So we ought to watch out for the end of this week. That's also OPEX for the end of the quarter. I believe it's the end of the quarter already. Holy baloney. Holy baloney. And there we go. So caution coming up. The way we've moved up, the height we've moved up, the speed we moved up, and the fact that we're just hanging. I kind of speculated 3 different paths. Either we go sideways and churn, we drop from here, or we pop from here. And so far we're hanging sideways. Just kind of churning in this little zone right around that 1272 extension. Off of the pullback, we did all the way down here, ramped up, stopped right at that 1272 extension. And it's curious, right? Curious. So retesting the breakout would be typical, the most typical pattern we see. When we ramp up, hit the 1272, a lot of times, I'd say at least 50% of the time, we retrace back to the breakout and then go for the 1618. Maybe it's only 45%. I don't know. Another nice chunk of the time we just go sideways, and probably the minority of the time, maybe 5%, we'll just ramp right on up. So that's the path right now. And now, if we break down below that breakout level, we could go down substantially more. So I just want to throw that out there. Caution. Now, options, OPEX is not necessarily bearish, not necessarily bullish. It's just an event, and it frees up the market. Like, there's a lot of options that get built up, especially over the quarter, and the market tends to move less and less. And then we call it a gamma unclinch in options terminology, where the options free up. And since options control a chunk of shares, these are just standard options that control shares, not index options. The standard options that control shares kind of create this clinching where you can't move it, like where the powers that be don't really want the market to move too much because of the options exposure. And then when all those options expire, it's probably going to be a record, I'm going to guess, somewhere in the neighborhood of $2 trillion OPEX this Friday. When those options expire, it frees up. We suddenly don't have all those options sitting there, and the market can move quickly for a little while until we start building up options again. It's a cycle that happens. If you want to know more about it, you can ask me about it in Discord, but I don't give any credence to it being tradable necessarily. It just lets the market move more freely to do what I expect it to do. So there you go. All right, moving on. And let's pop back over. So ES, about to open the market. See what we get here in just a second. S&P, 10 seconds, 20 seconds. S&P just kind of hanging. We didn't, that one, interestingly enough, let's just delete that off of there and delete that off of there. We moved down, right here off the high in kind of a three-way fashion. That's in conflict with the ES. The ES is the futures for the S&P, and we rolled over the contract, so we got about $50 of difference between them. There's the S&P popping up, maybe hit right there. Watch for resistance. We may go at it again right there. So the cash index matches the futures. So we may see this ramp up one more time. It's an interesting dynamic. Now, if we turn down there, watch out for our next leg lower. S5FI has come up back to just shy of the 80 line. I thought we might see that happen. The stocks above the 200-day has pushed right up to the 80 line also. Things are getting interesting here. And we actually made a higher high here. So this is indicating that we may be putting on the final push here. We hadn't actually broken out of the 80 line on the stocks above the 200-day. Gosh, since all the way back here before we took the big down. This was actually the top in 22, January 2022, that is. And we haven't been back up where more than 80% of the S&P 500 stocks were above the 20-day moving average. I mean, 200-day, excuse me. Getting them. We saw this one spike up and get rejected. That's stocks above the 20-day. So we got the 20, the 50, and the 200. Those are very common indicators. And these are just oscillators. These things are going to oscillate between the top. When we get to the top, usually it's a good idea to start looking for it to drop down to the bottom. So we're seeing this return. After we poked out, we're seeing a return back up here. We've seen that before. Look over here. We were up here. We dropped. Came back up. Little volatility. And same time of the year too, like February last year. And then we dropped down into March. We're running about a month behind. So this might roll over into April. I'm just throwing it out there. Like I'm just looking at it a different way. All right. This is what I do. I look at all the different information and try to align a story and come up with my plan. So at this point, coming up, and we're running about a month behind what we did last year. It looks almost the same as last year. We go look at this. We were out. We rolled down, came back up. Little volatility, came up again, and then rolled out the bottom. This tends to be an oscillator. Then we shot up to July, and then we shot down into October. Everybody thought we were going to crash, and then now we shot up here to all-time highs on the S&P, and then we kept grinding new highs, 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 and now we're actually rising while the market was relaxing a little bit off the high. So that's kind of interesting too. Shows a little instability to me. Rotation. So what are we going to do? It's a good question. Good question. Actually going to put an alert right up here. If we get above that 5150 area. I was looking for the 5150 to hold pretty strong resistance there. That's the number I've been saying that S&P was going to go hit for a long time, and we've just been dancing around there. So it'd be funny if that ends up being, we spike it today and drop. Be careful. Don't necessarily expect a pop. Don't necessarily expect a drop. Just waiting for the price action to prove it. Russell here looking a little less awesome, I guess you might say. A little less awesome. And a little bit more volatility here. We spiked right up there on Friday. Yesterday, kind of a red day. Today, volatile day. It's just going to break down. You may be like, what the heck? How do you trade this one? S&P is clear. NASDAQ's clear. But Russell is IWM. And it looks like we may roll on down. I actually bought some puts out to June. Thinking we might break down from here. See, this sucker spiked up, hit that 1272 of that move. Might be time for a drop. Kind of completes a big five wave up. And we may see a deeper retrace. If we don't hold this 170 level, we could extend on down here, like 150, possibly 130. That'd be pretty wild. So Russell looking a little more bearish than the general market at this point with the setup it's got. And what's in Russell? A bunch of your small regional banks. We have this wind down yesterday, the Fed emergency lending facility. A faucet was cut off yesterday. Those banks are going to have to pay off their $100 and whatever billion that they borrowed. Where's that money come from? I don't know. The banking problem could rear its head back up, and we could see this drop again to some epic levels here. I'm just saying. Like I don't necessarily think that's what's happening. I'm just throwing it out there as another potential possibility of something that might happen. You'd be like, I mean, look what happened last March. We got this sudden. We were coming along, rolling off the top, and then banking failure. And then we just kind of chopped and made a lower low, and then we kept, we just made a higher high. So we've expanded the range between October and last Friday. This is not exactly what I consider healthy. I mean, look at the sideways chop in this thing for the last 2 years. Choppy, 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 choppy with expanding range. Something's up. That's Russell 2000. That's your small caps. So something's up. And the market's not pricing it in. Crude oil continuing to hold the roadmap line. Come on. Let's bust out of here. We can bust above these rejection highs that we've made last week. I'd love to see this pop right up in here, at least 83, if not 86, and possibly 90. That'd be pretty wild. Now, if we break down below this zone right here, where we bottomed back here in February, we're probably heading on down. So that's kind of the long and the short of the range. We're just kind of sitting right in the middle. Right in the middle. Gold, trying its darndest to break out. We're probably going to, like I said yesterday, we're probably going to come back down, retest the breakout level. If we can hold it, we're going to go higher. If we break back below it, we're coming down again. And how far down? Let's erase these fibs. We turned down at the 1272. Imagine that. And that low to that high. The level be down here at, we may come right back down to this level again. Had such trouble breaking above it. Trouble breaking above. We shot up through it. We may come back and retest that zone one more time. Bitcoin keeps grinding higher. We hit that 72.9. Hit the 72.9. That was I have to jump down a time frame. Zoom her up. I know there's lots of lines on this chart. I'm sorry. Kind of got to keep up with a lot of things since Bitcoin's moving big. So we did this retrace last Tuesday. It was pretty wicked. A lot of people, we hit that 70,000 level and reacted severely negatively. Run the fib off of that. We popped up right to that 72.9 and freaking stopped. Imagine that. 1272 extension. It's like it's magic, I love these levels. Now, what do we expect now? Same three things I started out with the S&P. Either we're going to roll sideways, which it looks like we're rolling sideways for been doing that for a day and a half now. And then we pop. So we either roll sideways and then pop. We either just pop, which it doesn't look like we just popped. We're going sideways. Or we retrace back to the breakouts, back down here to 70 before we pop again. The next level up, right around 76, 76,360. Let's go 76,000. All right, let's be a little conservative. These zones are, I draw them as ovals and I draw them as zones because these are not definitive levels. They're zones. Anybody that tells you they're definitive levels is full of malarkey. And I'll just say they're full of malarkey. Anyway, so that next level up there also, zoom this back out a little bit. Zoom this back out a little bit. Where'd it go? Did it delete my level? Something disappeared that I had on there a minute ago. We have this level up here, right around 77,000 also. And oh, that's weird. It erased some of my fill lines. Well, that's not cool. All right, there we go. This 3618 of the bigger move, right up in there. Maybe where we're heading next. Now, if you look at the giant pullback that we did off the all-time high back here in November 21 to the low in November 22, that extension, 84,000. And we have like 70% odds that we're going to go up into that area, right around 84,000. Now, that doesn't mean we won't be without a pullback or some sort of craziness. And why am I spending a bunch of time on Bitcoin? Because, well, it's the crazy one right now. It's been moving more than anything else. And we have a FOMO rally on right now. If you're like, FOMO rally? Why would we have a FOMO rally? Look, we have a halving countdown. There's a major event happening in Bitcoin, and this thing is happening in about 38 days. We have 5,637 blocks left to go. It's going to take about 38 days, which puts us right around April 19th. And if you want to watch the blocks get going, memspace or mempool.space, you can watch the blocks get mined out. It's been about 20 minutes since we mined a block. So any second now, we'll probably get another block. Those two blocks back to back, 1 minute apart. So makes sense we wait 20 minutes. I mean, on average, it takes about 10 minutes. We're running about 95 blocks ahead. They're going to, in about 41 hours, they're going to adjust it. The algorithm automatically adjusts the difficulty. It's going to make it harder because we're mining ahead. The difficulty is going to get higher. The blocks are going to slow down. So that's how this all works. You can watch the transactions get included in the block. And then when the block gets mined, you can see the block right there and all the transactions that get included. The expected block versus the actual block that got mined. And you come in here and look at the transactions. If you didn't know you could do this, there you go. That's how blockchain works. And they've conveniently drawn this up in blocks, so it makes more sense when you say the blockchain. All right, moving back. So that major event's coming up for Bitcoin. We have the ETFs, and this is probably more supply squeeze added onto FOMO for the halving event. We're probably going to get some sort of epic pullback after the halving event, and then we embark on the post-halving run that we typically see. You may be like, JT, what are you talking about? Well, here was a prior halving. Right over here. Right back here, we got some pre-halving run, a pre-halving pullback, and then the post-halving run. Typically, we get a post-halving run that lasts 12 to 18 months. That was the last time Bitcoin went rocketing off. The time before that was back here. Oh, got to go to an actual index, not the futures, because the futures are new. All-time history. Come on. Load. 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 There we go. There was the prior halving event. We roll back a little bit. See right here, we got a pre-halving run. Disappointment in the halving. 2016. And then we got the post-halving run. Everybody see the pre-halving run? It didn't go nearly as high as we've gone this time. This time we've made an all-time high. Here's the one. Here's the one before. Look, we got a run, some volatility coming into the halving, and then an epic run. Actually did it in 2 moves that time, back in 2012, 2013. And even when Bitcoin was brand new, we had one of these. Bitcoin started, kind of did some crazy stuff, and then we did a spike. And then we did a big retrace. And then we did the first halving event. Right there. Got some volatility coming into it. And then we did a epic run. And then we did an epic retrace. And then another epic run and an epic retrace. And you know what's funny is that these moves look a lot like this. The psychology of a market cycle right here. This looks a lot like NVIDIA. It looks a lot like SMCI. It looks a lot like Bitcoin. This is the way a market cycle works. We get a crazy pop, we get some chop, and then we get a drop. And then we chop at the bottom for a while, and then we go again. All right? Just know where you are in the cycle. Right now, we're kind of building up. Probably not to the peak. We may see this thing peak out, come way back down, trough back down in here in the 40,000 area after the halving, and then we go on the big run afterward. I don't know. We'll see what happens, all right? See what happens. We could see an epic pop, an epic drop, and another epic run after that. Typically, we make the high. This high is typically 10 to 20 times whatever the low is after the spike. So we get the spike after the halving. We make a low after the halving. The next spike after the next halving tends to be 10 to 20x. Now, the low we had right back here, about 15,000 and change. So that makes our potential target 10 to 20x up here around 150 to 300,000. So there you go. We may not get a pullback, but right there's the target, somewhere right there around 30 to 40,000 at this point. Does it have to happen? Absolutely not. Is it a high probability event that we get some sort of pullback? Yeah, it's pretty high probability. Somewhere in this zone. A 50 to 618 retrace. Whatever we pop up, we could do that. It may only be a 38% retrace. I don't know. We'll see what happens. I don't know for sure until it happens. I just have educated wild guesses. Ethereum, still about roughly 15% off the prior high at 49. This thing is 70% likely we're going to do an extension out to about the 5,900 zone right out here. Now, what's the blue bar on this one? That is the Ethereum spot ETF approval date right there out here in May. So we've got, just like Bitcoin had spot ETFs that got approved, and we kind of rallied into that, and then we kind of got a pullback, and now we're on the current rally. Ethereum has spot ETFs. Now, the big difference here between the two at this point is that this is coin market cap. Bitcoin has a limited supply, and we're getting close to the end of the supply. Now, due to the way the halving events work, it's going to take us 150 years to get to that last Bitcoin mined out. But Ethereum has no limit on the supply. They can just decide to make more. They can decide to burn more. There's no cap on this. It's constantly fluctuating. It's going up. It's going down. If the dude Vitalik Van Buren or whatever his name is decides that we should have more Ethereum in the world, he pushes through that we're going to change the code, and lo and behold, there's more Ethereum in the world. If he thinks we should reduce the Ethereum in the world and start burning it, he pushes through a code change. So he's kind of the head dude. That's not what we have in Bitcoin at all. So just be careful. They can't just change the code with a little swipe of the keys and everybody's cool with it on Bitcoin. They can kind of do that on Ethereum. They push out these changes. Like they went from proof of work. Ethereum used to be mined out very similar to Bitcoin, but the head guy just decided we're going to change to proof of stake. And they pushed through a change, and it took a couple years to do, but they pushed through a change, and now it's proof of stake. And it's been lackluster ever since they did that. So there are key differences between Ethereum and Bitcoin, and anybody that thinks they're the same or could be the same or could merge or anything like that doesn't know what they're talking about. Dollar index came down, bounced off the little support here, rallying back up. I expect to find some support in this, or some resistance in this zone, and turn down again. I really expect this to move on down, make a lower low somewhere around this 99.50 area down there. Now, what's popping today? MSTR was popping. Now it's kind of churning. And I mean, we're up 2% from the close yesterday, but little volatility. And this is very extended, and we may see a very quick retrace. This thing has been known for very quick retraces off of these extensions. Many times only taken a short period of time. You may be like, well, this current move looks nothing like the prior move. Actually, it looks a lot like the prior move. Especially when you consider fib line wise. Look at this right here. This pullback right down to the roadmap line. We shot up well past the 272 and then epically came down very quickly. And that was just from July through October of last year. Corresponded with the market pullback. Interestingly enough, then we did another one right here from January down to January to January. We did that pullback right down to the roadmap line, held for a couple days. Initial move up, retrace. I bought shares at 500, and then we shot up epically high. Went through the 272. That was kind of I didn't expect us to go much higher than that. Honestly, I got out at 950, and we've continued to rally on up. I am not sad one bit. My 500 went to 950, and there we are at 1500. Craziness. We've touched the 4236. The craziest extension on this baby. Now, this one's definitely crazier than SMCI even. That's why I'm like highly cautious right here. Highly, highly cautious. And there we go. I need to load a different template. There we go. The crazy 686 level, 1% of moves. We'll go tag that up there at 2416. Don't necessarily think we're going to do that. We could get a vicious retrace. That could correspond with a Bitcoin retrace. It could correspond with a market retrace. We've seen that. We've seen both of those right here. This one was a market retrace. This one was a Bitcoin retrace. Both of those right in MSTR, right there. That was a market retrace. This was just a Bitcoin retrace. And it doesn't have to correspond to either. It could just do its own thing and get a wicked retrace. This is not a miner. They're an investor in Bitcoin. They borrow a crap ton of money. They sell shares. They dilute their stock. They raise a bunch of money, and then they go buy Bitcoin with it. And they have about 190,000 Bitcoins. But that's not, like, investing in Bitcoin is not their primary business. Mining Bitcoin is not their business at all. They just hold a bunch of Bitcoin, and that's the only reason that they're really ramped up like right now. Not because of any business that they do. So that's a dangerous chart right now to me. Almost more dangerous than the second one here, SMCI. Now remember this pattern, right? We're getting some volatility here, euphoria. Keep it in mind for both of these. Both of these look a lot like each other. And that, arguably MSTR is more crazy than SMCI right now. They're both crazy. Even Nvidia, another one on the crazy train. And we're already getting that. Is that last spike? Is that last spike? And that first, think about it. I'm not telling you to short it. Eventually, it's going to come back down. Is it today? Is it tomorrow? Is it from higher levels? Nvidia could ramp on up here and be the largest company in the world. Right here, Infinity market cap. Nvidia coming in right there, number 4. Gold taking the top spot. So Microsoft, the largest company in the land right now, hanging out right at 3 trillion. Apple took a little bath, dropped off of, it was given. Apple held the top spot for a long time. Apple and Microsoft swapped back and forth for a long time, for 20 years or something. We occasionally see other companies pop up, and then it's been historic. The history of this thing, when other companies pop up, especially if they make an epic rise to the top, they get slammed back down very hard. Cisco, ExxonMobil, GE have all tried to take the top spot. They managed it for just a few days, few weeks, and then slammed right back down. So it's a cautionary tale. Nvidia has rocketed higher up into this top 3 for companies. And if it takes the top spot, it's probably going to get slammed down hard. Now, to take that top spot, we're going to have to pop up about a $1,200, $1,250 price per share. So that could be the top. That could be the target. I don't necessarily think that Nvidia has the company to, has the goods to be the top company in the world. Especially when you look at what Microsoft and Apple touch in everybody's lives every day. I don't think that Nvidia is necessarily that big a dog. So just a cautionary tale. At least not yet. Like, they went up too far too fast. It's like the story of Icarus. You go too close to the sun, your wings melt and you burn. AVGO looks like we could be topping out here. Caution. Like, I'm seeing a lot of these cautionary charts here. Oracle, after consolidating for a good long time here, came up shy of doing an echo down. Interestingly enough, held the 382, retrace of that high right there, and popping target on the upside somewhere around 135, maybe 144 above that. It's really interesting. That kind of did a watermelon seed squeeze situation. ASML. Where's Bitcoin? Bitcoin's on the Bitcoin exchanges. Bitcoin's everywhere. Can't actually touch Bitcoin. ASML rocketing up higher. I got in, did a little trade back here, but shoot. That one did the exponential move. Also, let's just clear all this junk out. Move all the drawings. Look at the big picture. We are right to the 1272 reaction. We may come back down to the roadmap line at this point. That may have been it. Next target up will be 1220 up there. ADBE. It's having some trouble breaking on out. If it can break out above this zone, we're heading up to 817 area, 815, maybe just 800. Remember, they're kind of zones, not specific individual numbers. And we're just turning on the roadmap line here. Popped up, retraced, hold support. We can break out. FNGU. Am I trading it yet? No. FNGO looks like it wants to retrace. This is a leveraged ETN, exchange traded note, different from an exchange traded fund. And it may drop back down. Meta. Little bit of chop here. 3 paths. Sideways pop. Looks like we're doing the upper path, but we could just run out of steam here and go for the retrace. So the paths are not necessarily clear. Like, it looks like we tried to go on the, just shoot on out to the 1618. So far having a little trouble. If we break down, we may go gap fill and retest down here. Arm. Remember that pattern. Remember that pattern. This one popped. Doing the choppy thing. Remember this? That choppy thing? Watch out below. Probably coming back down to this 80 area. More than likely. Coin. Hit the 270 area and found resistance. Now, we have set up that 618 level, 278. We have that spike where we rejected hard on the way down. It's probably going to be some resistance on the way up. If we can get out of here, 538, 676 upside targets. So if you feel like you've missed out on coin so far, we may see a retrace and pop that through that area, which sets us up 70% likely. We're going to see a move up to 538, possibly, more like 35% that we'd see a move to 670 area. TSM. Look at that. Another one of those exponential moves. Haven't reached the target yet, though. 168 right there. Might need a wicked pullback before we can get it. USD, ultra semiconductors. Look, same wicked. Straight up. Went to extension targets. This is ultra, so it's leveraged. Be careful on leverage. MMM, 3M, popping, but that looks like a freaking horrible chart. Oh my gosh, that's almost what I would call a dumpster fire. We just need like a reverse split or something in there. But that is, look, we did the move up. We did the bounce off the roadmap line, move up. Held the 618, or that's not 618. That was the prior breakout. Let's see. Lowest low, highest high. We didn't do that. Ooh, man. Trying to save it here. This could be a reversal. It could. If we get through that gap fill. Pretty wicked gap fill, too. We get through the gap fill. 116, 122 on the upside. CRWD. Looks like we want to come back to the roadmap line. If we're going higher, there's kind of like what I thought we might do. It looks like we tagged that 1272, retraced back, broke below the breakout level. This may be game over on this move for CRWD. Maybe in the final breakout, we may had a lot of trouble getting to that 1272. That 1272 is from this extension. Had a lot of trouble. So retest the breakout from here. We've got some support sitting right there. If we could go again, 426. If we break down below it, watch out below. Roadmap line is way on down there. It's another one looking like the exponential move. Set the final push, and we get the retrace. MDB sitting on the roadmap line, maybe sitting a little below the roadmap line, actually. Probably going to come down and retest this zone. Keeps pushing a little lower, a little lower. It would kind of make sense if we came down about right there. Because then that zone sets up properly right there. So I think we're probably going to go test that area right there. Sometimes the fib, when you pull the fib down to a target and it makes it look right up here, it sits right with that over there. None of this stuff was there before we make this low. But that all looks like where we might go, and then set that fib line up right there. We'll see. SMH, another semiconductor ETF, looking a little crazy. And was that the top? I don't know. We'll find out soon enough. SOXX, another semiconductor ETF. LABU is a leveraged biotech ETF. So we got leverage, and we've got the other thing, biotech, on top of that. And there you go, biotech. Flip me sides. So watch for the retrace to the breakout line. And this was a downtrend line of highs, lasting for a good long little while here. Started over here in August 22, made that high. January 24, broke through it, retraced to it. And if we can bounce off of it, probably head up to 220. If we break down below it, watch out below. This is basically a dumpster fire because it has reverse split in it. PDD. This is China. I don't trade China. Just, it's one of my things. Like low price stuff, China stuff, leverage stuff, med tech, biotech, anything that FDA's involved in. It's Food and Drug Administration. I just don't like those things. This looks like a three-wave move. And this guy, right, this tool, that low, that high. Looks like we could go just a little bit lower to wrap this up. Right down in here. CVNA. And sitting at the 618 extension. And we may get another retrace. Next resistance up around 97. Mid 90s, 90, I guess 92 to 100 really. AMD, that looks like it may have been the final pop. Yeah, I had the big target up there. We kind of spiked it and dropped right back out. We could get a little churn here and then do the complacency drop. Be careful. Wrong. That's interesting. This one, the complacency and then drop. Could get a little churn and then drop. Be careful. AMAT. We haven't seen a lot of these bubble moves in a long time, but right now there are a ton of them. AMAT looks like it wants to retrace. TECL. Technology, 3X bulls. Gosh, that's not trending very well. The breakout would be above 91, 110 on the extension. This is a 3X leverage thing, so you got to be careful on that one. ALB just keeps grinding lower. I have this target down here and this like head and shoulders target hanging out down here. It may take a little while, but we may get there eventually. Somewhere around 85, 86, 87 support down there. KB. Financial. What a move. But you zoom out a little bit, it's just choppy sideways junk that doesn't look like it's going anywhere. So we did retrace and popped up, hit the 1618. That can be resistance, and it happens to be prior highs over here. So if we hold that zone, watch out for a retrace. And it can be violent. Like this thing has a history of being violent to the upside and the downside. Baidu. Hunting for bottom. Hunting for the bottom. China stuff. I am long this one. I was hopeful. Now, less hopeful. If we break down below 92, I give up on trading it. But holding in there a couple years out on that one. XLK. Just grinding the top. ZS. Grinding the roadmap line. Could that be support? Quite possibly. Gonna have to move up through here for a conservative entry. Going higher to 276, 297. If we break down, we could come back down where we consolidated down here. That was like a long consolidation last summer. While the market was rocketing higher, this one was consolidating. Then we took off and we may retrace again. FUTU. Chopping around, lower high. Caution. Big resistance right up there. QCOM. Potentially going to rocket higher. Oh, it did rocket higher. Retrace. We hit the watermelon seed squeeze targets and retrace. Retrace. Sap. Looks like that wants to retrace. Rio. What's this, today's list? Yeah. It was it was a lot like yesterday's list. Rio tag the 1272, popping up, retracing back to the breakouts. May go down to the 58 level, bottom of the box. Snow. Have that target down here. This whole move up, look, even though it was like green earnings, everything's rosy, everything looking great, this was a choppy, overlapping, corrective type pattern that only got up in, didn't even make it to the 1272. So it's kind of a big wave, 1, 2, and a wave 3 right there. A flush down, making a lower low, then right here, cleans this pattern up, and we can go higher. So right now, waiting on that move, that flush down. My auto trader thing flipping off there. On, big retrace, bounced off the 618, under the roadmap line, probably going lower. That move, first move down, retrace, hold. Second move down puts us down around 22 in this area right here for on. Add alert. ACAD, pharmaceutical. It just like drop out of the sky sometimes. They pop and then they drop and then they gap down. Just virtually untradeable. BA can't get it out of its own way. And JT said we're coming down to this zone. It's just taking a little longer to get there than I thought. We're almost to, well, we're in the target oval. My target price 180. Could go as low as 160, maybe even 150. But it's about time to look for a position. Somewhere around 175 here. I'm going to start hunting a long-term long position for BA. Look, I was pretty confident we were going to turn down from this level. This level was a target for a long time. We shot right up there and turned right down. They lost a door like right here. And then all these other troubles. It's funny how the chart just did exactly what I expected to do. Did I expect Boeing to have all these problems? No. But is it the chart that brought the news, or is it the news that brought the chart? I don't know. You can, a lot of people tell you the news. That's why the chart's doing what it's doing. I predicted this pullback before any of the door fell off or anything. For those of you that were around, Sledge, Goose, you guys know I said to watch out for a large retrace back down to this target area. Wrongimer, I know, told you too, before it happened. So it's kind of crazy. Epic predictions. Love. Retracing. Not exactly the most bullish chart, that's for sure. Borderline, dumpster fire. If we're going lower, 18 right there. PHI. That's some craziness. No idea there. That's not tradable for me. NVS. And right back down to the roadmap line. There you go. So there you go. All right. There we go, everybody. Have a great day out there. Remember, I got 30 minutes of awesome coming up at 5 p.m. Eastern Time. SPX bias for the day is extreme caution. If we hold below that 5150, bias is down at this point. If we break above, probably going on up just a little bit. There you go. It's the long and the short of it. How far down? This target zone, somewhere around 49. one way or another. May take us a while to get there though. And then roadmap below that, and roadmap line, and then this target area down here, 4,400 below that. So we've got some retracing to do, quite possibly. But we could go higher first, so be careful out there. The account you save may be your own. Have a great day out there, everybody. And I'll be in Discord hanging out.